Hello, this is John Kvale, and this is our January 2019 first monthly review of the year. And those of you with a sharp eye that aren't listening, I'll show you we've got a new family member. I'll put a picture up, and that's what's got one little chomp on my face. It's a French bulldog and have 5 cuts. So I'm not going to show you too much here. We're going to go on down to the video, and we've got some really good stuff actually to the post. So here we are on the desktop. And the review, we had several financial planning reviews, and this one I feel like is very important, and I'm really glad that I'm doing the video on this. There have been more tax law changes this year than there have been in many, many years. So I am suggesting that we get all of our tax information to our tax professionals as soon as possible. Also, those of us that are using tax preparation software, make sure you're updating, you're checking for updates, because we feel like there's still going to be a lot of updates. So we've all been warned. Let's get them in there. Let's not be the end of the line. Now, one other thing, we expect corrected 1099s. Don't worry, if we get those, we can send those to our professionals. I'll be on top of that, notifying you with these. This was just interesting. I'm going to write about this in the newsletter. For those of you that are listening, I caught wind of this Karuli report that of 800 employers that were interviewed that had 401k providers, less than 30% wanted your money in the 401k after you left. Less than 30%. I could not believe that. I've written to them to try and get this full article, and they wanted like $18,000, so I'm not going to do that, but I'm going to watch for more about it. It's just amazing to me that would occur. So anyway, moving on, make your pension. We're getting a few offers to buy things out here and there. I go into a pretty deep example of what we've seen in pensions, and it's worth reviewing. And those of you that are listening, I'm on the second part of the financial planning portion of the review. And the post, I feel like I did a really good job of just brainstorming and doing everything that can kind of go wrong with pensions. And so don't take any decision lightly if you're about to make a pension decision, and especially if you're about to make a change. The crux of what I'm saying here is we've seen some buyout offers, and more times than not, those are not really good for you. All right, capital markets. Just yesterday, the FOMC was on tap talking, and it looks like they are really holding tight on not raising rates. And unbeknownst to us, that had a much bigger impact than we thought. The second thing, tariff talks are making progress. Interestingly enough, they're making progress because China is gasping a little bit, and that makes them more likely, as long as everybody plays fair, more likely for us to get a tariff deal. And then third, earnings are still cruising along. They're not blowing them away like they were a year or so ago, but they're still doing pretty good, and that gives us good valuations. Capital markets have gotten over their hissy fit in December. We'll probably talk about that more. I still do think that we have a test of some sort back there. The higher we go, likely the lower the retest may be. But for all practical matters, it's much happier right now. It'll be interesting when the book is written on what happened in December. But that's it. This is January 2019, already end. Enjoy your the day and the end of it. And it's a Super Bowl weekend, so whoever you're going for, I hope they win. And I don't have a dog in the hunt. Cowboys lost a while back. Have a great day. Hope you enjoyed the new intro and exit music as well. Thanks. Bye-bye.